So 2 hour order block, 1 hour order block hit right there back to the golden zone. Now, you had another opportunity to take a long. You had the back test of the golden zone, which is right here. Now, if you're still having the opportunity to take the long, what you can do still is look for confluence. So you have your high and your low if you're wanting to long this, right? Price comes up, back into the entry trigger. And then what else did you have in confluence? If you go from the low now to the high, turn on your golden zone. Oops. Turn on your golden zone, slide it over, look at the confluence that you had right there. Okay. So where would your stop loss would have been? Where would that be? If you took it right here off the golden zone and the entry trigger, remember what the stats say. You have 2 hour candles. Sorry, I know we're on the one, I'm still on the two, but let's just use this while we're here. You have 1 2 hour candle closing above the entry trigger and the golden zone testing it perfectly. A second and a third. Put your stop loss wherever you want within here. Just remember the stats. Even if you put it at the 0.12, it's still 0.5% loss. 0.05, you're only at 0.9% loss. Okay. Now, what's the reward out of this? You had an opportunity for 4% to the upside. Perfect risk to reward. Okay. Now, let's take this from another. So we had the short, we had the long. Okay. We had another opportunity to long. And we have here an opportunity to short. Now, in this case, I'm looking for the short. So what do? Low. I'm sorry, let me just hide this so that you can see this cleanly. And we might just go over 15 minutes. That's fine. But we're almost done here. So I'm looking for a short, right? This low where we found support off the entry trigger in the golden zone to this high. Price comes down. Back test the entry trigger, right? And then we get the drop. Now, there's other tools that I can apply to this, and you'll find them all in the Crypto Majors chat in the pinned section, okay? But you can see when you turn on targets, I have the entry trigger with targets, the entry trigger with the golden zone, and the entry trigger by itself. Again, golden zone is always good to take profit one, and look at what happened, because it could have done this, right? It could have done this. Entry trigger, rejection, golden zone, back up. It could have done that. That's why it's a good idea to take profit at the golden zone of the 0.5. More importantly, though, what is our risk if we take this trade? Okay, so we hit the entry trigger. There's our trigger. We take the trade, and our stop loss would have been at the 0.12. But now we have to remember. So here we see price. Okay, we have interaction here, and it's closing inside of the entry trigger. Okay, once you see this close inside, it's up to you whether or not you take that trade. Generally, what I would say, though, is first let it lose the entry trigger, let it come through it, and then come back up into it. And then that would be your entry right there. Lose the level and then back test the level. Only after the back test do these stats work in your favor. Do these stop loss stats work in your favor, okay? So we would have risked, let's do this again. If we just put it at the 0.12 or even below it, we would risk 0.2%. Even if we go to the 0.05, we'll only risk 0.6%. Okay. Now, why do I never just say like, well, just, take the trade, put it above the high? Because statistics show that if price is rejecting here, right? If price is rejecting at the entry trigger, and it's moving down, if it comes back up, the chances are it's going to take the high. So there's no reason to sit here and wait around for price to come up here and take more money from you. If the stats say that if it comes back after the back test, if it comes back up to this level, these levels, it's just going to make another high. So why sit there and watch your money get taken away for nothing, pretty much? Okay. This is something that I feel will help you guys take that next step into becoming a pro trader. All right. And a part of that is having the best risk to reward. So we know that our risk was very minuscule, 0.5. set it whatever you want. Do it how you like, right? I give you the stats. I give you the tool. You guys back test it. In these examples, I'm sure you can see how effective the stop loss would be with the 0.12 and the 0.005. So mix it up how you like, okay? I'm not going to tell you guys how to trade. So what's our profit then? If we have a 0.5 risk, our profit could have been 8%, 8.2%. That's a good risk to reward, in my opinion. Okay. And then if you take profit here, let the rest run, well, you had another opportunity here. Although this is not something you typically want to be doing, shorting here, you could have taken it this way. You could have think of it this way. I'm just going to scalp this mini range. Okay. I'm just going to scalp the mini range. All right. So if you want to scalp the mini range and you know that the market is trending downward, then you want to be favoring, especially if you don't have any real support that you've come to yet, right? You want to be favoring the short still, at least for the scalp, right? And then a scalp that can potentially turn into a day trade or potentially turn into a swing trade. So you take the low to the high. We're looking for shorts. And we want to wait. Okay, this would have been one, right? Probably would have got stopped out. Context dependent, guys. Very context dependent. In this case, I would look at the higher time frame, right? This looks like weekend action. Yeah, this was weekend action because of the consolidation and nothing happening. So you see these close. Now let's throw in our golden zone. This would have been a little tricky to take. I'm not going to lie, because you see the close below. You're holding resistance. But when you see consolidation like this, I mean, just kind of presume, or whatever strategy you like to use, and whatever account you had for this general area. I mean, I don't know. This is a tough one, but either way, if you would have taken this once, you would have gotten stopped out, right? Because it hit the 0.12. And then once you see this rejection, close below, back test, close inside, rejection. Okay, this is like I said, context dependent. But what you can see is you get the back test, you get the golden zone. There's your take profit one, and then, like I said, let the rest run. So let's just assume you got stopped out once. Maybe you lost $50, maybe you lost $200, whatever. You'll get another opportunity. Here it was here. Here's your next opportunity. And still, even if you see that the 0.12 is back tested, you can still use it or the 0.5 as your stop loss. So in this case, what I would recommend is when the range is tight, when it's really tight, and you know that the 0.005 will give you your stat, when the range is tight like this and consolidated, use the 0.005. Use the 0.005. Because everything's tight and you're seeing all these wicks, just use the 0.005. You would have never been stopped out even if you shorted early. Okay. So what was the potential profit here? Even if you closed it early, you would have had 11%. Even if you closed it early here, you would have 7% for a 0.5% risk. Okay. Don't get greedy with your risk just because the stats are in your favor, especially when you have small consolidation ranges like this. If it's a 0.5 stop, if you entered early here, right? I mean, even if it's a 0.9, that's still good. Okay. You would have been in the market. Okay. So let's do two more examples and then we'll wrap it up. Let's go with this one down here. So this is the area where we were looking with Jim. I can remember we were all trying to figure out, okay, is wave 4 in? Let's say we didn't know. We had this feeling that it was in. Okay, we believe we see an ending diag, which is what we most likely had here. So how can we trade this then? Okay, what we can do is we're looking for longs because we don't want to short down here. We believe a wave 4 is done and we want confirmation. So what we can do is we take the high to the low. We wait for price to come up, back test, which we got here, of our entry trigger, letting us know it's time to go. And we know what happened after that. Okay. We had 17%. If you close it early, you still had 15%. If you close it even earlier, you had 13%. And if you close it even earlier, you had 8.5%. Okay. So with all that in mind, more importantly, what did you have to risk? Let's find out. After the back test, the keyword after the back test, you could have had anywhere from a 0.2 to a point down to the 0.005 to a 0.6% stop loss, less than 1%. You'll find that this is very common. Okay. So let's do two more. Let's go here. So this was the top of the wave 3 that we presumed wave 3. We'll do this one and we'll do this one because this is a good example of how you can just get into a trend that's really bullish. Okay, so first off, we're presuming that wave three is in. Okay, so what do? We're looking for a short. So we go low to high. If we believe the high is in, this is what you do. When you believe that you have a high in or a low